Hey guys, what's going on? Today we're going to be looking at the top 3 ASX growth stocks. Remember, nothing in this video is financial advice, and if you enjoy the video, make sure to like and subscribe. Now let's get into the video. The first exciting growth stock we're going to be taking a look at is Kogan. Kogan was founded by Ruslan Kogan in 2006. It is an e-commerce company that is headquartered in Melbourne and is only online. This can be thought of as something like Amazon, but primarily for Australians. Kogan has acquired Mighty Ape, which is one of New Zealand's biggest online retailers and has 720,000 active customers. Kogan Marketplace and Kogan Retail offer a wide range of products that are delivered to consumers. This means through Kogan you can get most of what you want from individual sellers or from brands. Kogan has 3 million monthly active customers and has had big growth in this number. Kogan was also just included into the ASX 200. Now this is a significant milestone and is generally very good for companies. The reason this is good is because fund managers will need to buy into Kogan, especially those tracking the ASX 200, which will push up the price. There is Kogan First, which is a subscription-based model similar to Amazon Prime. This is great because it makes people pay a constant subscription, which seems cheap, but over time can turn out to be very expensive and will significantly help the cash flows of the business. Let's take a look at the wide range of products that Kogan have to offer. There is Kogan Retail, which allows consumers to buy a significant amount of things that they may want, operating with 20 exclusive private label brands. There is also the Kogan Marketplace, connecting sellers with buyers and allowing buyers to buy a wide range of products from individual sellers. There is also a range of other things like Kogan Energy, Kogan Health, Kogan Life, Kogan Home Loans, and all of these things may go well, but may not go well. As long as a few of them go well, this will significantly support Kogan's brand. They don't all have to be winners in the long run. Kogan also has credit cards, Kogan First as I've already mentioned, and there's a massive range of things here, meaning it can have a lot of growth in the future if some of these become quite successful. Kogan has had an amazing year of financials, which has been partially due to the pandemic and people being stuck inside, but has also been due to the up and growing e-commerce sector. Adjusted EBITDA grew 175%, representing increased profitability. Kogan achieved 768 million in gross sales, which is a massive increase since last year. There have been 95% increase in sales growth year over year for Kogan. Moreover, Kogan has had a steadily increasing revenue. Kogan has also had an amazing return on invested capital. This means Kogan is using the money that us investors give to them very well. QuickFS have said its return on invested capital is over 100%, but I thought this was a bit too high, and Morningstar have said it's more like 30%. 15% is amazing, so to see Kogan achieving over 30% return on invested capital year over year shows they are using our money extremely well, reinvesting into the business very well, and this is a great sign for Kogan. Kogan also have positive free cash flow, and this has only increased up to the end of the year from its previous 37 million. Kogan also have a great debt to equity ratio of under 1. It is 0.71, which shows that Kogan do not have that much debt relative to equity. Kogan have a current ratio of 2.32, which means they have 2.32 times the total current assets as they do total current liabilities, meaning they have a ton of cash on hand and they can do a ton of different activities. Kogan has recently released its fourth quarter results, and these are not shown right here. However, these are extraordinarily good, and Kogan has grown from 2 million to 3 million customers and has continued this amazing growth that Kogan has had. To conclude, I don't think Kogan will die off after the pandemic. It continues to expand its product lines, increasing its total addressable market. There is a steadily decline in cost of logistics and delivery. There have been insane past growth for Kogan, and e-commerce adoption is only increasing year over year. Global e-commerce sales will grow from 2.8 trillion in 2018 to 4.5 trillion in 2021. Obviously, this is not financial advice, but I do believe the $17 price target is a great price target for Kogan, and I did get in on this price. I think Kogan has fantastic growth runway ahead as e-commerce continues to expand into the future. Appen is probably my favourite growth stock in Australia for 2021 and beyond. Appen is an artificial intelligence company and machine learning company. It's a bit confusing to explain, but I will try my best. So basically, Appen uses training data, which is collected from a pool of 1 million individuals around the world in order to teach machines and help inform their decisions to do specific tasks. These machines will then acquire data annotation capabilities. So for an example, Appen can be used to help inform the responses that, say, Siri does when it talks to you. Every time you talk to Siri, Siri will respond back in a certain way, and Appen theoretically could help inform these responses. Appen could also be used to recommend advertisements to you or recommend certain images on the internet for you to look at. Appen can translate across 180 languages, and a lot of this is due to the pool of 1 million individuals who all they don't come together, but they all work to teach the machines how to do specific tasks. This allows Appen to perform a very wide range of tasks and informs their responses. Appen is also used by the biggest companies in the world to develop their own artificial intelligence algorithms. Appen can train artificial intelligence to inform Microsoft's search engine, Bing, or for Google's advertisements, and already has massive partnerships with these big companies overseas. There is a massive opportunity for Appen going into the future. Appen have a $3 billion market cap and believe the artificial intelligence space that they specifically operate in will be a $96 billion industry by 2023. This is because artificial intelligence is a growing industry with an expanding use case as the world becomes more technologically integrated. Appen is one of the best companies to capitalize on this, as they are one of the biggest companies in the world regarding artificial intelligence and are certainly the biggest in Australia. Now, the biggest opportunity with Appen is Appen recently have reported not so great financial results, and people have been very concerned because Appen operate a lot in the United States, which is struggling due to the pandemic. This has made Appen's earnings take a massive hit. Of course, this is a short-term problem. This will get over and done with once the pandemic is gone, and Appen should and have said they will be on a trajectory to start increasing their results massively. This has resulted in the stock being oversold and has reached lows of $22. This is a massive sell-off, and I don't think the stock price is putting in a long-term vision for the company. I think these are great levels to buy at for myself. Obviously, it's not financial advice, but I'm accumulating at these levels and think Appen will do very well. I love to get my businesses when they have short-term problems, as it means you can get them for an extraordinarily cheap price. Obviously, this problem needs to be short-term, not long-term, and I do believe it is short-term. Despite these short-term problems, Appen really does have fabulous financials. It has had a steadily increasing revenue apart from 2020, and it has great returns on invested capital, which is good, around the 15% mark, fluctuating a little bit. It has also had a steadily growing earnings per share. Its equity growth is pretty good, and it has positive free cash flows. Obviously, 2020's taken a bit of a hit, but if we can see the old growth trends, which I think we'll see, it'll be quite good. Appen actually does have a dividend yield, which is interesting for the company. I'm not quite sure why they pay a dividend. And it also has a fantastic debt to equity ratio and a fantastic current ratio. The debt to equity ratio is 0.51 and the current ratio is 1.57. This means Appen don't have that much debt and they have a ton of cash on hand that they can use to expand operations constantly. This is what I love to see in my growth stocks and my tech companies, and Appen is doing all of this. One very interesting company that you may not know much about is Saracen. Saracen is a gold mining growth company founded in 1987. Saracen has 3 mines located nearby Kalgoorlie. These are some of the best reserves in Australia and support a 15-year mining life. Saracen also has reserves in North America. Now, I do believe gold mining companies and gold in general will do very well into 2021. And this is due to the continual adoption of modern monetary theory, which means we are printing a significant amount of money in order to combat with the crisis and all of that stuff. This is basically devaluing the US dollar, and generally gold is a safe haven that hedges against inflation and will act as the inverse of the US dollar. So I do think gold is positioned to do very well as it did in 2020, and I believe it's going to do very well again in 2021. Hence, I want to get into some of the best gold mining companies for 2021, just like Saracen. Saracen is also going to be merging with Northern Star Resources, helping it become the 2nd largest miner in Australia after Newcrest and the 6th largest miner globally. This is very good for Saracen, as it's going to help Saracen really come up and be a massive mining company for gold, and that should do very well for the share price growth into the future. Saracen also expect to continually increasing their production at a rapid rate, and I think they are positioned to do well. Let's take a look into Saracen's financials. Out of all of the companies I've showed you today, none of them have the same financials as Saracen. Simply none of them. Saracen's financials are quite amazing. Their revenue has been steadily increasing every single year, and in 2019 it was 556 million, and in 2020 it reached over $1 billion, almost doubling. Saracen has insane return on invested capitals, showing they're using our money great. Last year it was 20%, the year before 28%. I don't even know how a gold mining company is doing this, and this is really great for the future. Its earnings per share is steadily increasing, and it looks like its PE ratio will continue to drop a little bit because its earnings per share are just growing at a very nice rate. Saracen has also had insane equity growth from 500 million to 1.5 billion, and great investors like Warren Buffett say instead of revenue growth, you should actually be looking at equity growth for the future. I'm not 100% sure why, but this is quite an interesting fact. It has also had some great free cash flow growth, getting from 15 million in 2019 to 229 million in 2020, and some good share price growth. Saracen does not pay a dividend, and this is understandable as we are looking into growth companies today which generally don't pay a dividend. Saracen has a debt to equity ratio of 0.62, showing we're probably not going to go bankrupt, same as the current ratio. It's looking in a pretty good position. The current ratio is 2.08, and the financials are just so amazing for this company. Like, if they continue doing what they're doing, this could be one of the best investments that I've made. Obviously, this isn't financial advice, but the company just looks fantastic. So that's the end of the video, and these were the top 3 growth companies for 2021 in my subjective opinion. I am invested in all of these companies, and I look to expand my position in all of these companies. They look great for growth going into 2021, and I really expect big things from these Australian companies. If you enjoyed the video, make sure to like and subscribe, and click on this video on the screen. I'm sure you're going to like it. Thanks for watching.